Hey, I wanted to do a really quick video to demo my IchEMA model again. I've shared a few images and showed how great things are working or how certain things work, but this gave me a good opportunity to show you an example because the Bitcoin chart, of all charts, is just raging on IchEMA. So there are a ton of examples I can show you from the Bitcoin chart, which, as we know, is pretty much the most important one we have. Now, for those who aren't aware, my IchEMA model consists of now 5, since I added a new one, 5 dynamic supports. They're actually support or resistance, but I call them my 5 dynamic IchEMA supports. IchEMA Dynamic Supports, IDS. What that means is the 55 EMA, the 99 EMA, and the 222 EMA. All represent the 3 EMAs and 3 of my dynamic supports. In addition, I have the top and the bottom of the Ichimoku cloud, which are also sort of moving averages with the way they're calculated, but it's pretty complicated, and I don't fully understand it myself. What I will say is the EMAs are very easy to understand what's going on behind the scenes, but again, it's not really relevant. All that matters is they provide a strong, high probability of success that you have a strong support or resistance based on those various indicators. So by dynamic, what do I mean? Normally, when I refer to support and resistance, I'm talking about this support right here at 7604 or this resistance at 8112. That is a static support. It's a horizontal line that goes across the screen, and it does not go up, it does not go down. You could have another horizontal support at a different level, but this support and this resistance themselves will not change. They are static, and they will remain a constant indefinitely. So the benefit of having a dynamic support, well, there's several benefits, but most notably is when you are in a region where you don't have a horizontal support, you can rely on the EMAs or the top and the bottom of the cloud to provide support for you. So what I'm saying is, if you think about where Bitcoin has been, right? Imagine if Bitcoin had gone up to 19,000 like it did in 2017, and back then you were trying to chart it out. Now, the price had never been up that high. It had never been up above 2,000, never been up above 1,500 before, or 2,000. So once you get up to 5,000, 10,000, 15,000, 20,000, and you're getting in and out of trades and you're trying to set a really good buy order and a great price to sell at to get the most profit, as you're doing that, you don't have any support and resistance on the screen that you could use to identify highly probable targets for support and resistance. In other words, we've never been there before, so there's no data in that region of the chart. You won't be able to identify, oh, look, this we always bounce right off of this line right here, so let's note that as a strong support because we always seem to bounce when we get down there. You can't really do that. So by having the EMAs, you have a dynamic support that's moving along with the price, and as the price goes up or as the price goes down, you could use it as a tool to help predict where you're going to get bounces and trend reversals. Now, that being said, I do use other types of supports in my model. Overall, my model relies almost exclusively on support and resistance in one way or another. I constantly say that if you're learning TA and you're learning how to trade, focus on support and resistance more than anything else at first, because it is the most crucial skill that you're ever going to develop, identifying support and resistances, because every other indicator is based heavily on SR, support and resistance. If you're using Fibonacci, Fibonacci is just creating support and resistances. So if you don't understand how they work and what's going on when you hit a support or resistance and what the anticipated behaviors are, unless you really understand what's going on there, you're not going to be able to use Fibonacci because those levels that Fibonacci is giving you are just supports. And if you don't know how to work those, they're useless to you. Same with Elliott wave. If you don't understand how support and resistance work, you won't be able to use Elliott wave because all Elliott wave really does is it draws lines connecting a support to a resistance. Here's a support, there's a resistance. Wave 3 is going to go from this support to this resistance. And you just connect it with a line, and it's like connecting the dots. So, on this chart here with Bitcoin, you can see I had a resistance up here at 8112. I had a strong support down here at 7600. And those two horizontal supports are just as important as my IchEMA supports. But in this particular video, I wanted to illustrate how great my IchEMA model is, because everybody knows normal horizontal supports and horizontal resistances are helpful and they're very easy to locate. You don't need to have a tremendous amount of experience to understand what's happening there. This is a $116. This coin always bounces when it hits $116 and then it goes right back up again. It's happened 3 times in a row in the last day. Okay, well that $116 price is going to be a strong support moving forward, and when the price gets back down there, we know that we can buy right above that support, because chances are there's a high probability that it's going to hit that support and bounce up back to 130, right? So if you know that, you can buy right above that support level, and you could use it to your advantage, so you're getting an ideal entry right at that support. You could take it one step further, like with my risk mitigation strategies, I have a stop loss on every single trade. So in that scenario, I would buy at 117, right above that strong support at 116, and then my stop loss would go right below that support. So I have my stop loss is protected by a strong support, so I'm not going to get stopped out before it goes on a big run. More often than not, I won't. Obviously, that does happen from time to time. So with the IchEMA stuff on this Bitcoin chart, you can see how well things are working. This is what we're looking at here. So this is the price action. You can see this support down here was incredibly strong. It was providing a ton of support here. When you see these candles on the hourly, you'll see the wicks will spike up or spike down, but the body of the candle, that's really what matters the most. The body of the candle is where a majority of that trading is happening, because that's where it's going to open. That's where it opens and closes. If it's red, it opened up here and closed down here. If it's green, it opened at the bottom and closed at the top. And in that hour, while that candle was running, there were quick spikes, valleys where it dips down or shoots up really quick, and that forms the wicks. A majority of the trading occurs at the candle body, so it's very common to see the candle bodies themselves sit right on a support, even though there's a wick that dips down. In those cases, you have to pay attention to how far those wicks dip down, because if they tend to go only down to this level, 75.64, we can use that to our advantage. We only have this one right here, and this one right here goes further down. But every other candle either stops right at the 7,600 support, or the wick shoots down to the 75.60 support right there. So we have a little bit of a range between those two supports where all the wicks are too. If you were to get into a trade there, that would be very helpful information when you're trying to set a stop loss order. In any case, that would be for a later video. Here you can see the horizontal support's working really well. It's providing a ton of support. Every time we get down there, we have a couple instances where we fall through, and then we always seem to come right back up. So that's doing its job. And then the upper resistance here is also doing its job. Over here, that was serving as a support. Then the next candle, it went up. That was serving as a resistance. Later on, more recently, as a matter of fact, over here, we got back up there and got rejected again right at this resistance. That resistance also happened to meet up with the 222 EMA. So let's move on to that. With the EMAs, with the horizontal supports here, you can see how limited we are. Down in this area, we get some support from that support, which is great. Over here, we get some resistance. But what happens in the middle? If I want to get into trades and if I'm trying to gauge what the market's doing here, that information is useless to me. I don't care if I have... Siri was listening to me the whole time. I don't care if we have a resistance here and a support down here. If I don't know what's happening in the middle, it's not going to help me as much. Now, when we get down here and then we bounce, come back up, and then get back here and bounce, go back up, as that happens and I start to see a pattern forming, I could use that information to my advantage. But what makes it really great is I know what's happening in the middle. Normally, I would see bounce at the support and go up, come back down, bounce at the support, go up, come back down, bounce at the support, and then go up. However, we're also getting rejected almost perfectly from the 55 EMA here. So right here, we bounced and went up and got rejected almost to the penny right off of the 55 EMA. This big wick shot up and bounced right off the 55 EMA, came right back down. Then we hit the bottom and went up again. The next attempt, over here, we were getting rejected right at the 55 EMA, came back down, and again, fell right to our support over here. Then we started moving up again, and then we got an insane amount of resistance from the 55 EMA. So we were riding right along the 55 EMA till eventually we broke up. We finally break up, and then look what happens. The second we break through the 55, our next IchEMA Dynamic stops us, gives us resistance. We can't break through. We do break through for a second, which again happens. They're not perfect, and once we're above it, it becomes a support. So right now, it's sort of bouncing around where we're staying relatively close to the 99 EMA, but it's not holding that well. It did at first, but now it's sort of bouncing above and below. Then we finally get back above that 99 EMA, and on that move up, we get rejected exactly at the 222 EMA. Over here, we have a wick that spikes up slightly, but for the most part, these three candles in a row are limited to maxing out right at that 222 EMA, And then look at the most recent candle right here. Again, got rejected at the 222 EMA. This dip came down, got support right at the 99, and then broke through, bounced right at the 55. This candle right at the 55, ton of support, went back up, resistance at the 99 EMA, broke through and started going up, support at the 99 EMA, resistance at the 222 EMA. And looking back, you can see this huge wick right here got such a strong rejection from that 55 EMA. And then as we move along, you can see it's kind of riding right along the bottom of the EMAs. At that point, I knew that the EMAs are going to hold really well on this chart. And sure enough, for this entire sequence, we were bouncing back and forth between the 55 and the 222. And in the middle, we would stop and hover around the 99 till we would make a move back to the top or back to the bottom. Hopefully you guys can see how well these EMAs are holding up in this case. When we did break through the EMA on the top, we got rejected right at the top of the cloud. So that's where my last two dynamic supports come into play, the top and the bottom of the Ichimoku cloud. Right here, they aren't particularly valid because they're not doing much for us, but there are other times we can go back to and I can show you how strong of a support or resistance we get out of them. Like, look right here. Look at all this support. Boom, 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 boom. We're getting a ton of support right at the top of the Ichimoku cloud. Over here, we went down, and look, we bounced up, and we're right at the top of the cloud here. Rejected, 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 rejected. Came back down, made another attempt, and we were never able to break through the top of the cloud. Then we get to an area like this, which is insanely strong, because we have the 55 EMA, the 99 EMA, and the top of the Ichimoku cloud. So that's where we have an IchEMA confluence, where we have multiple IchEMA dynamic supports showing us confluence, where they essentially agree that that's a strong resistance. So we had a tough time getting back above it because the resistance was so strong. Then we move along and find ourselves in a similar position here where the EMAs are starting to converge. We might get to a point where the EMAs converge into a tight area and form a really strong IchEMA confluence zone, which could serve as a resistance or a support. So that pretty much is the gist of it. You can see how well my IchEMA model is holding up here and how informative it is, how much information it can give you on the fly. When you're trying to form a trade plan, it's crucial to have as much information as possible, and there has never been another model that I've found that provides that much information, that valuable information, this frequently and predictably. It works incredibly well. Just to show you like an example, for instance, look at, here's my EOS trade, right? I got in right here because I knew that if I bought right here and I set a stop loss down here below the 99 EMA, that it would be protected. So I entered right here, and then we immediately started going down. I wasn't the slightest bit nervous because I knew the 99 EMA was right here, so the chances of it breaking through that EMA and hitting my stop loss, which is down here at 652, was very low. Sure enough, boom, support, boom, support, boom, support. 3 candles in a row, getting really strong support off of the 55, or sorry, off of the 99 EMA, and now we're moving back up again. So hopefully that illustrates to you guys how helpful it is. Along with down here, you could see it was riding the 55 for a while. You could look at Atom, for instance. I had this incredible trade on Atom. Me and the rest of the group got into this trade based off of this entry down here. Now, from my entry to the highest point, we had a 60% run. That's a pretty epic gain right there, if you ask me. But let me pull in closely so you can see down here. When we entered into this trade, when we identified this as a potential breakout play, we were coming down like this, and we were getting support right at the top of the cloud. Look at all the support over here from the top of the cloud, the top of the cloud, the top of the cloud. A ton of support right there. Then we break up and come back down, and we're getting to the point where we're going to hit the EMAs. Now, this is what I noticed. After we bounce and start coming back up, we have the 55, the 99, and the 222 just crossed over. Now, a crossover with my IchEMA Dynamics is crucial, and that's a very bullish indicator in and of itself, but we're not talking about that now. Let's focus on the support aspect. They provide a ton of support, so when we have all 3 of these EMAs and the top of the Ichimoku cloud and the bottom of the Ichimoku cloud, all within my stop loss range, which is my entry to my stop loss, means I have an insane amount of support. So we bought in over here, and it went up and came back down, and went up and came back down. And some people were saying, oh, maybe this trade isn't so great. But look at this up close. Check this out. This is absolutely incredible. Now you can see how my model is so successful and how people who are in the group, as well as myself, have done very well using it. Came back down. This huge wick, big sell-off, right? boom, support to the penny on the 222. Came back up. This candle, big wick down, dumping, dumping, dumping. Strong support right at the 99 EMA. Came back up, came back down again. Support, wick, right at the 99 EMA. Next candle, big drop down. Big, the red body of this candle, support right at the 99 EMA. Went back up again, came back, couldn't break south of the 99. Then we took another step up, and then all of a sudden we're holding at the 55 EMA. And then we make another move up and come back down. Now when we do come back down, where do we hold? 55 EMA holding. 55 EMA holding. We broke through those EMAs and came down, and look at this, the 222. Boom, massive support. This was a really big sell-off. I mean, it was dumping right here. This was a point where I was like, wow, we just lost almost 3% in a single candle. This trade might actually die and get stopped out, but nope, the 222 EMA caught it and protected us, and our stop loss was never in danger. Same thing on the next candle. Then the next candle, we get support from the top of the cloud, and now we're going to build upon it from there. We start getting above the 55, bouncing off the 99. Next thing you know, we're really getting up there where we're going to be above all the EMAs. Now we see the EMAs diverging. Now we have IchEMA divergence, which is where you have an increasingly impulsive breakout, and that's defined by a divergence of the EMAs. When the EMAs are rapidly diverging and pulling away from each other, that means you're moving up with more and more impulsiveness. And then once you correct and start coming back down, you see the EMAs start to contract again. And in this case, we had so much support from the 55 EMA here that it didn't stand a chance. We came down. All these candles were just slamming off of that 55 EMA and went right back up. At no point was it even remotely close to coming back down and stopping us out. So you can see how strong the EMAs were there. Even up here, these higher areas, we were sitting right on the 99, the 55 EMA, riding it perfectly. And look at these instances where the 55 did start to fail for a second. Look where we got support. Right there, right here on the top of the cloud, top of the cloud, top of the cloud, 55 EMA. So all the way up, we're riding this thing. And all along, we have the 3 EMAs and the top and the bottom of the cloud. Same thing, we got down here, and I spotted, all right, this might be a new potential entry. This is the most recent one. We were getting rejected by the EMAs, and I said, as soon as we clear over those EMAs, we're going to have so much strong support that it's worth getting in. So I jumped into the trade here. It almost actually stopped me out over here. It got down pretty low. But sure enough, we got above the EMAs, and now we have a tremendous amount of support. So I'm in this trade, and I have no fear of getting stopped out because of the IchEMA support we have. All right, hopefully that was a pretty good in-detail explanation of what the IchEMA model is, how I use it, and how incredible it can be. Just using my IchEMA model, this Atom trade brought in 60% profit on that trade, depending on where you sold. But at the very least, you're going to make 40 or 50% out of it. So that was an incredible trade. I'm very happy that it came to fruition, but I'm not that surprised. When I saw that setup with all 5 of my IchEMA Dynamic Supports within my stop-loss range, and I was only risking at the beginning 3%, I knew that it was going to be a golden trade, and sure enough it was. If you guys have any questions about my IchEMA model, you can hit me up, respond to my posts, or DM me. I'll try to get back to you. I'm pretty busy with members of the private group, so I can't always respond to DMs in a timely manner. But feel free to try me, and I'll get back to you as soon as I can. All right, guys. Thanks for stopping by.